Hello, and welcome to the show. My name is David Lincoln, and you are watching the Short Vol Show live on YouTube. Can you hear me out there? Just for some reason, my stream key was all messed up there. Anyways, welcome to the show. And what we have going on today is another one of those days where the market is down and the VIX is down as well. And I just think that this market is like kind of crashing right now as far as volatility goes. Now, why is this happening? That the market is, hey, what's up, Marcella? Why is this happening that the market is down and the VIX is down? Well, I just think that stuff really hasn't been moving around very much. We can use some market maker terms with you. One of them is called being backspread. Now, being backspread means that you own options and you're trying to take advantage of owning options. So let's think about when somebody buys options in whatever stock or even in the S&P 500, they want the stuff to move around and they're going to make money if it moves around. How do they make money? Well, they either sell out the options at a higher price, trade another option against it, or they trade the underlying futures or stock against those options that they're long. And yeah, we've been moving around. You know, we're down today, but we really haven't been moving around enough to finance owning options in these products. And so people are trying to get out ahead of it and getting rid of the options they own in the SPX. So even though we're down, people are getting out of their options positions. This is what the VIX being down means. It means people don't want to hold on to options, whether it be in the S&P 500 or in individual equities. It's all kind of filtering down into a lower VIX. Let's take a look for a second at the chart for the VIX recently, and we are still in backwardation. Now, you know, my message, what I think of all this is it's about time. I mean, we passed yesterday. We passed we're in third place for longest all time in recorded history being in backwardation. So yeah, you might be upset that the VIX is down with the NASDAQ down 114, but of course the VIX isn't based on the NASDAQ. It's based on the S&P 500. SPX is down 36, but look at the chart of the VIX now. It kind of looks like there's a trend, right? There's a downtrend here going on, and it's going to take something big to reverse that trend because it's starting to pick up speed. This train is riding down now. You can see it. We've obviously, you know, we've reached a peak up there at 85, and this train is rolling down the tracks right now. And I wouldn't be surprised if it goes lower than you think it would go, because a lot of times once it starts rolling in one direction, it keeps on rolling. Now, we still are in backwardation, right? We're still inverted in the term structure. We're still in a spike if you were to look at the VIX term structure. Let's pull it up. Okay, things have gotten better. We're only in backwardation by 8.59%. But, I mean, we are still in backwardation. Hold on, let me switch this over here. We're still inverted by 2 points to the front month and 6 points to the second month. But things look a lot, quote unquote, better than they did just a few days ago as we pull out of this. Now, it looks here that we'd have to get down to like 30 for this to go back kind of to normal. And because normal is having the VIX lower than all the futures. And right now, the VIX is still above all the futures. So we're not back to normal yet. So somebody was writing to me, and I got this thing. Some of you know that I was a market maker, an options market maker in the 90s and 2000s. And somebody wrote me something saying, you know, is it really true that market makers were out there to screw everybody? And, you know, were you really out there trying to like screw retail customers? And to which, my response is, you know, why would we want to screw retail customers? Because if we give them good prices, then they'll come back a lot more times. Actually, I'm sorry, it's hard to say that with a straight face. Of course, we're looking to screw people. And it's not that you're looking to screw people, but like everybody else in the market, you're looking to make money. And any way you can get away with making money, you're going to make money. I became a market maker when I was 22 years old. The job I had before that, I was working as an apprentice mechanic in an unheated garage in Arlington, Mass. When I got a chance to actually make money trading and being on the floor, you better believe I was trying to make any kind of money I could. Unfortunately, it's not as easy as it kind of sounds, like, oh yeah, we're going to go out and manipulate things and screw people, because most of our customers, as a market maker, most of your customers are not like some old grandma in Des Moines. It's like, especially back then, most of the customers were wired, connected, smart people. And you got to go into this marketplace, as a retail customer or as a retail trader or as a new trader, you got to get into this marketplace with the right frame of mind here. I mean, everybody in the market is looking to screw everybody else. It's a very competitive, completely competitive environment. There's no customer service here. There's nobody wants to hold your hand and help you out and this kind of stuff. No, this is a world where it's all about the dollar, it's all about the money, and you have to come in and take money. There comes the bell. You've got to go in and take money from other people if you want to make money in these markets. This isn't like, it's not like calling customer service or I don't know, whatever other customer things you've been at where you're at a restaurant and you complain to the manager or something because you don't like the service. This is the center of the capitalist world. You've got to fight for it if you want to make money. And of course, and like I said, most of our customers were wired people. The environment I was in as a market maker, the people that had big orders that were trading with me were like insider traders. They knew what the earnings were ahead of when they came out. A lot of these people, Goldman Sachs, these kind of people, they were wired, they were hooked up. And so every trade that I did was probably a losing trade at times, because you pick some small random stock and somebody's going to come in and spend, $1 million on options in some random stock that never trades. You better believe they know something. So, it's a game. Making markets is a game, and with the big customers we have, play on many different levels, but it's definitely cutthroat. And of course, the exchanges are going to try to get as many customers as possible. And by the end of when I was a market maker, the exchanges kind of had us over a barrel. I mean, they wanted us to pay the firms for orders. So the firm, there was multiple exchanges: Philadelphia, New York, Chicago, San Francisco, and they would say, we're going to pay for them to bring their orders to our exchange as opposed to the other one. So you've got to pay money for these people to come in and trade with you. I mean, it got to a point where you thought that market makers had all the advantage and were behind the scenes manipulating everything, but we were basically bent over a barrel. The grass always looks greener on the other side. Anyway, and I'll talk more about, I want to talk to you guys about my first experiences going on the floor. I started as a runner, which is just somebody who brings the orders out to a broker to fill. And, I moved to Chicago not knowing anybody, lived in a youth hostel, became a runner, and started working free for a trader after the close to learn. And, I couldn't afford to work for free, but this was the only way to get in. And I knew if I could figure it out, I could make money. But in the meantime, you've got to fight for it. And, the same thing to you guys who are new and, doing trading through the way we do it these days, through online and through your computer. You're going to have to fight for it if you want to be successful. And you have to take it seriously, and you got to realize that everybody you're trading with is trying to take money from you. Of course, that's the whole name of the game. You're trying to take money from them, right? Nobody's going to just hand it to you. So if it's a good rule of thumb. If some trade looks like an obvious trade, then you might want to think twice, because people are out there to screw you. And you got to have a little bit of a killer attitude if you're going to survive in these markets. All right, Tom Closen, thanks so much for your membership. Yeah, I mean, VIX now 47, and I know we're so used to having it at these high levels that 47 sounds really cheap, but actually 47 is historically pretty high. If we back up and look here at the VIX, and I'm going to have another market maker on next week to come by and talk on the show, and you can ask him questions about what it's like as well. And he might say something different than me, but it's an interesting part of the world. It doesn't really exist as much anymore because now everything is computerized. But if we back out to a year chart, we can see that's a year chart there, folks. So we're in an extreme situation still. If we go out to a 3-year chart, okay, so there's a 3-year chart. We still are like historically very, very high here. And like I said, this could come crashing down. Now that you can see the tail of that chart there, that is a fake print right there where you see that going down to 35. That's not real. I don't know why it printed like that, but that's not real. So just disregard that. But yeah, I mean, this thing could keep rolling lower. So I would be aware of that. And this shouldn't be shocking to you if you're long TVIX or VXX. You've noticed probably that it hasn't gone down that much, with the VIX going down a lot. But once we get kind of the ship righted here, these products are going to start working like they usually do. And I would be careful. Nobody knows. Nobody has a crystal ball. I don't know if volatility is going to continue to fall like this, but it certainly seems to be picking up stream to the downside. And if this is what it does when we're down 30, imagine if we're unchanged, or if we're just, what if the E-minis are up 10 points tomorrow, or not tomorrow, whatever, next session. This stuff's just going to melt even more. Now, coming into the weekend, people don't want to be holding this stuff over the weekend. And those of you who are new here, this stuff exhibits something called weekend effect. And what that is that we see, and it's basically based on people are strategizing in the S&P 500. Remember, the VIX comes from the S&P 500. People are strategizing in the VIX and the S&P 500, and they're saying, I don't really want to hold options over the weekend. And so prices get kind of artificially low on a Friday afternoon. Once Monday morning comes around, they sometimes just bring the prices right back up again. But I know it would be, some people have had the idea of like, hey, I'll sell some options on a Friday and then I'll collect that theta decay over the weekend. Well, the people that are traders are ahead of you on that one, because they've already taken out the decay for the weekend. So if you sell something now, you're going to come in Monday and it's going to have the same price. You're not going to collect any theta probably for the 2 days off, because they've already taken that theta out and they're a step ahead of you. So, I would say as you're progressing as a trader, I would immediately think in any situation that A, someone's trying to screw you, and B, the markets are going to be smarter than you are. And if you take those two things into consideration, you won't be as shocked. Anytime that I see some trade line up that I think is like, oh, that's an easy trade, I'm going to make so much money, I step back a second and I ask myself, what makes me so lucky? And okay, so I see the question in the chat there about oil prices. So, was the VIX affected by oil prices rising? It's hard to say. I would say yes, but it's hard to decipher, especially in the moment, what is affecting the actual S&P 500. And of course, the S&P 500, which the VIX comes out of, is affected by everything. So yes, it's affected by oil prices. And I don't find this shocking at all that oil is right back up. In fact, we've been talking about this a lot. It's gone up pretty quickly, but I didn't see it staying at 19. And once again, I'm not going to be with this guy who's like, oh, that was so obvious, everybody knows that, and kind of, say I knew it all ahead of time, because I don't a lot and I lose a lot. Do you know anybody that makes money trading long term? Yeah, tons of people make money trading long term. I wouldn't be I wouldn't have been a market maker for 10 years if I wasn't making money. People don't stay in this game if they're not making money, but there's a ton of turnover. And it's debatable on which products there's more turnover in. I, for one, don't understand Forex at all, and I know there's a lot of turnover in there, but there's plenty of people out there that make money pretty consistently. Now, you don't necessarily have to guess the direction of the market to make money. All you need to make money consistently is to figure out one little thing that you can do that makes you money. You don't have to figure out how, gold, bonds, all this other stuff. You don't have to be an expert in all this stuff. You just got to figure out one, two little things that you can do, maybe with options or in some little niche that will make you money. And that's all you need to survive as a trader. Am I making money? Not today. I mean, I am making money today, but this year hasn't been good for me so far. I made money last year. Name one what? I have not made money so far this year. I did make money last year. The year before was basically a scratch. And it says name one. Oil producers choose because... But yeah, I mean, if you're not making money, there's no reason to be in this business, right? I wouldn't stay here and just continue to lose money if you're not making money. For me, lifetime, I'm up several $1 million as a trader. And, to start out with, it would help, I think, for people to just maybe buy some of the SPY or some sort of long-term long down here. And, as we recover, that should help you out a little bit. Name one person who makes a living trading. All these people. All the people most of the people in our chat, in the Facebook group. My buddy Clinton's a fund manager. I'm not going to name a bunch of people's names who are watching this, but a lot of people make money trading. That's why they're professional full-time traders. I know it's frustrating right now for people, and this has been a tough year even for professional traders. A lot of people who are fund managers and whatnot, when there's a bull market, if you load up on stocks and you just hang out, you make money. And usually it's a bull market, and usually a lot of fund managers make money because they just load up long stocks and the market drifts higher. And that's kind of the way it works. The short vol strategies that I outline have been successfully making me money the last couple of years. That's why I'm outlining them for people. We are in a crisis right now, so it's pretty hard. Seth Golden is still trading, yeah. And, the people that I have come on, any people that I have coming on the show are successful traders that make money. Doug, what's your last question? Would you sell at a loss now in a VIX position? Yeah, I mean, if I don't like a position, I'm going to get out for a loss. Of course, you can't expect every position to make money, and if stuff's going against you, get out of it. It's tough out there now. Things could go higher from here in the VIX. Of course, things could turn around, but we're seeing right now, just to describe it, VIX down 4 points with the market down. That's pretty big. It's a pretty big move. We'll have to see what happens out of here. Now, this is a crazy environment, and people who have these little ways to make money figured out are not necessarily making money in this environment because it's tough. We live on the bubble. Yeah, so there you have it. I just wanted to check in with you folks. I did put some trade-ons today in VXX. With VXX a little bit higher, I bought, let's see, I went out 21 days and just kind of traded the at-the-money stuff. So, just bought a little April 48, 46 24 April 48.46 put spread. And I would recommend, especially if you're going to trade UVXY, I would put resting orders in and let the order kind of come to you, because if you try to, UVXY has been incredibly illiquid. And if you try to chase stuff around, it's not going to work. As far as making money, I've made money this year in my 401k. It's just the VIX trading stuff that has not worked. It's tough. Ed, I can't tell you honestly what Seth Golden's P&L is. I don't know. And people are pretty cagey about making or losing money, and that's why, if somebody is going to come on and say they make money, I would actually say to them, like, prove it, because people are cagey about stuff. You knew people were making money at the SIBO if they drove up in a new car, this kind of thing. But yeah, I would have people prove it. And I think a lot of the people that are like on YouTube with these like trading programs who are like saying they make 200% per week, I think a lot of that's garbage. And I think a lot of the stuff in the chat rooms is garbage too. I don't think people are making money. I think they're lying about it all the time. I'll be honest with you when I make money or when I lose it. And I took my P&L down about a month ago because people were hassling me saying, oh, your account's too small. Oh, your account doesn't matter and all this stuff. And, it just was starting to aggravate me. When do you close a losing VIX position? That's a tough question, NYC Doc. What if it's a Jan 2021 put, and I think it will go up at some point later this year? Well, the thing is that if you're looking at a put that's a 21 put, it's not costing you very much per day in decay, right? So I would consider keeping it on. Yeah, SIBO is definitely way different from trading at home. And it's been a transition for me coming back and being a retail trader, because, being at SIBO and being able to buy on the bid and sell on the offer and have all these different ways to work as a market maker was different than being a retail trader. As a market maker, you really don't get to decide what your positions are. Somebody wants to buy it, so you're a seller there. Somebody wants to sell it, you're a buyer now. Everybody in the world wants to sell some call option, then you're going to own that option. It's a little different to actually get the freedom to say, oh, I need to figure out what position I should have on and craft that position. Can you show which monthly VIX future is connected to the particular VIX option expiration? Yeah, well, I think you're talking about like VIX options from the SIBO VIX options, and I don't think the weekly futures trade very much, and I don't actually trade this product, but I do know that you should trade the future that's attached to that option. So, for example, this 15 April strike here, you should be trading the April futures against it. Okay, and then the May options, May 20th. This is the expiration in May. You should be trading the May futures against them, and people would probably say trade the closest month active future against the options you're trading. But me personally, I would only trade option months that have a direct future attached to them. If we pull up barchart.com, you're going to see that there's not very much volume at all in futures except for the front month. If we look at, here's VIX futures from barchart.com. And if we look, we can see the volumes over here. And you can see right now, the 2 months are pretty much equally represented because we're in the middle of in between expirations. And so you see the front month being traded 45,000 contracts today, the second month 32,000. But then it starts to really drop off. June 9,000, July 2,000 or 4,000. Then this is even more than we see sometimes in these farther out months. Sep 2,000, Oc 1,000, then only 300 contracts. So, and this is fairly typical for anything that has futures with it. If you look at the S&P 500 futures, you're going to see 1 month is traded more than the rest, or the Dow futures. Dave, am I trading only volatility? I trade also options on stocks at times for earnings plays and stuff like that. And I talk about it when I do that. I traded some Tesla stuff. I'll do earnings plays. Sometimes I do calendar spreads for earnings. And I'll dabble a little bit, but pretty much these days I only trade VXX options right now. And when you say you're trading volatility, everything has to do with volatility, whether it be options, shares, options on individual stuff. We're always making some analysis of volatility, and we're trying to figure out our options price is correct for how much stuff's moving around, what's our prediction in the future, and this sort of thing. I would check out some of these stocks that have bounced around. I was looking at a couple issues that have been moving around. One of them is DRI. This is Darden once again that has Olive Garden. It's made some crazy moves lately. Here's the 20-day for Darden. And you know somebody got screwed on this. I mean, it got down to 26, and then people chased it all the way up to 65, 66. And then it's just faded right back down to like it was 42 and change. Is internet provider a good buy? I don't know. That's a good question. Once we get back out of backwardation, back into contango, we can go through strategies to trade the VIX to the short side more. I think that we're getting back into a range now where it makes more sense to put positions onto the short side, and especially once we get kind of out of being inverted. Remember, we're still inverted right now with the VIX price being higher than the futures, but it appears that we're getting pretty close to coming out of that. Well, it should be maybe next week when we come out of that. I did make a tweet earlier this week talking about how we are in one of the longest periods of backwardation ever. And let's see if I can pull that one up here for you folks. Here we go. And so this is a list of other times that we were in backwardation for a long period of time. And remember, the VIX has only been around since the mid-90s. And this is where month 1 is greater than month 2. So in backwardation as far as the front 2 months. And I think we've topped 39 days now. So we are firmly in third place. That's a good idea, Ed. Yeah, I mean, and yeah, that's definitely a good idea. I kind of get off topic sometimes because I go off and trade other stuff. And the thing is like, I kind of want to take you on the ride if I'm going to trade other stuff. I want it to be authentic of like what I'm doing and stuff. But yeah, certainly let me consider if I want to, have a sample account that's always up watching to do stuff. How do you pick strike price for VIX put options? Well, I wouldn't worry too much about open interest is more important as far as liquidity over a long period of time. But I look more at just long term where I see this stuff can go. So if we're talking about strike prices, you can pull up a chart of VXX and you can see, okay, well, VXX got down before all this craziness. VXX was down around 13. And, if vol comes in completely, then we can get back there. And if we go back into contango, we will take at the low at some point. It's just a question of when we do. And so when I'm looking at strikes, I'm looking at my prediction of where this stuff can go at some point. You were right about TVIX every time. Can you guess how it will be for the next week? Well, that's the whole thing. Log and ask is that it's just a guess, because nobody knows what's going to really happen. If we continue with this trend, obviously it's going lower, and if I had a choice, I would stay short it and not be long it. But I don't know where it's going to go. And Ed, maybe that's a good idea. If you look back through my videos, you can see me, trying different strategies. The thing is like I found that I was kind of churning the account because I would want to show these different strategies to people, and so I would keep switching from one strategy to another, back and forth, back and forth. It's a kamikaze trading the ETF right now with the respect for people who trade them. Yeah, it's tough out there, certainly. I can tell you, though, with TVIX, it's like a $300 TVIX. I just wouldn't want to be long it because we know it's going to go back to 38 at some point, right? And so it's just a question of time until TVIX goes down. So log and ask. I would give you my advice that I keep telling people, which is would not hold on to TVIX for more than 48 hours at a time. And it's performed pretty well with the VIX moving lower right now because this term structure has to right itself, and instead of when the VIX goes down, all of that movement down goes to righting itself and correcting the term structure, and almost none of it goes to actually making TVIX and UVXY go lower. But at some point, once we get the term structure back in contango, these products are going to move faster and faster to the downside as the VIX moves lower. So I would be careful. And if I didn't realize I was right about TVIX every time, but if I was, it's pure luck, because there's no way for anybody to predict day to day what's going to happen in VIX ETPs. What you can know is that over time they're going to go lower. You got out of TVIX last week. Oh, that's good. Like I said, I felt really bad because there was one day when a lot of people who were long TVIX had lost money, and they, some new people were in the channel, and I was telling people, okay, by the end of the day today, do something to lighten up a little bit on your positions, and people sold it right on the open, and it just, of course, went straight up from there. So I try to be very careful. Yeah, I kind of feel that way too, Ed. Good observation. But you know what? You don't have to agree with me to watch the channel. You can disagree with me and still get something out of it. It's it's kind of a hard thing to kind of lay it out there in front of people, because when I make mistakes or do things that aren't so bright, everybody gets to see it. But I think that I would rather have something that's authentic than to have people think I'm some sort of trading genius. Yeah, there you go, Tom. Yeah, TVIX is, I don't trade TVIX because I like to deal with options, and TVIX doesn't have options to do with it. And UVXY right now is almost impossible to trade with options because it's so wide and there's no liquidity. The only, if you put orders in like a rest, the only time they're going to trade with you is if you make a mistake and put an order that's kind of screwing you. So I would be really careful with UVXY. Unless you're going to put some trade on that's long term. And, the market makers can't mess with you if you know your prices really well. And if you just put a limit order, if I want to sell these calls for $1, and so you put $1 limit, and you just wait until it gets there, if it ever gets there. And that way they can't screw with you. If you start putting market orders in or something in options, then they're going to play games with you. It's just like putting market orders in the stocks. I don't use market orders myself because I want some control over things. And if you put limit orders in, then you're going to either not get filled or get your price, which is a good thing. All right, so I definitely will be on Sunday night at 6 o'clock for a strategy session on Sunday night. Hopefully I'll be on before then, but I'll definitely be on at 6 o'clock. Yeah, I know, Ed. I did have an open account that I was having everybody see, but people started giving me a bunch of grief about it. So I don't know. Maybe I'll do it again. Well, I mean, the president is going to affect. Do I read the Wall Street Journal? Yes. And there's somebody in our group who is in the Facebook group who's a reporter for the Wall Street Journal. And I keep trying to ask her to put me in. I'm like, put me in the Wall Street Journal, please. And it hasn't happened yet, but I started trading in 1994, Marcella, but I took off I was out of trading from 2005 until 2015. So I was off for 10 years. All right, so I'm going to leave you with my bad guitar playing, and I hope you folks have a safe weekend. Forget about trading for a while. Just relax, enjoy yourself, and enjoy your weekend. And I'm going to leave you with some bad guitar playing on my part, and I will see you soon. Thanks, everybody, for watching. I really appreciate all your support. Those people who've bought memberships and whatnot, that's very nice of you. And I'll see you next time. We do have some special guests next week, so I'm very excited for that. So mark that spot. I think the special guests will be on generally at 4 o'clock in the afternoon. So mark the spot, and it will be fun. See you guys next time. This is my bad guitar playing.